Buy every share of this stock you can. This is not financial advice, but my research suggests it's a good idea to buy as much as possible before November 26th. The company is Intuitive Surgical. It's an AI stock, and what they do is help surgeons do surgery using robotics. This is a first mover in this field. Other companies are going to start to use AI in surgery and in healthcare largely, but this company already has $2.5 billion in revenues. It's up 20% year over year. They also have a growing use of their tools, which is really promising. So they literally have more deployments of their different systems, and these deployments are a big deal because you can imagine how costly a surgery is, right? So, and they have to be extremely careful as well. So this isn't some consumer voice AI product or some type of Silicon Valley gaming, error checking, note-taking AI app or anything like that. This is the real deal. The revenues are real. Let's jump into the chart as well and talk about why money is flowing into healthcare, even as the market sells off and big tech sells off. So this is not financial advice, but Intuitive Surgical, ticker symbol ISRG, looks great.
This is Sam Putnam.
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 All right, so procedures using one of their systems increased 52% in Q3, just as an example. So the use of the systems that they're actually already sold is increasing, which means people like the product, and that's about as solid as an endorsement as you can get. This is this massive earnings result. I mean, this is crazy. Notably, you're not betting on, an earnings that just happened. This is held up for weeks now. So it's been almost a month, and right now it's at a really favorable level where you can risk 545 or even a little bit higher, something up like 555. So risk $5 and look for $20 or more to the upside. So nice spot for the company, and over the long term, it's basically followed the market. This is the second half of 2023. This is 2022, which all stocks pretty much went down. This is the mid 2024. There's the tariff dips, and then in the last year, it's sort of disconnected from the market, if we're being completely accurate here. I mean, look, it's basically chopped around, right? I mean, went down as the market went up. That's the green overlay in the background. So that's actually a good thing right now, just because if you do buy the stocks that only follow the market, you're going to end up like this. I mean, sure, these earnings are okay. I mean, Palantir earnings were the best ones. This is the most wild example. And you still sell off 20%, 25% in just a couple weeks, 18 bars, it says there, right? The beginning of November to now. So you have to find where money's going. And sure, you can look at pharmaceuticals. Money's definitely flowing there in that ETF. And then XLV is healthcare, and that ETF is doing well. So you got to look at healthcare companies, in my opinion. And Intuitive Surgical definitely seems like a big player in that sector. So they did buy back of $2 billion, 4 million shares, which is great. That's the kind of thing Apple would do, right? But they're also not at the scale of Apple where it doesn't mean anything. So here's a little bit about the results. There's that revenue growth, 20%, $2.5 billion. They raised their full year guidance as well, which is a big deal. And it might seem like, it's a $150 billion company. What kind of growth could they possibly have? And I mean, obviously they can grow a lot. I mean, OpenAI is a 500 billion valuation company. Anthropic is even about exactly 100 to 150 billion, I believe, private, which is the second, competitor, the second place to OpenAI, the competitor to OpenAI. So this company's first place company, I guess you could say, its leader would be Johnson and Johnson. And if we look at Johnson & Johnson, of course, we all know the name, but the market cap is huge. So there's certainly room for growth here. It's like 3 times the current market cap. And these are the leaders in robotic assisted surgery. So we not only have growth of procedures using their systems, we have higher revenue year over year. And if we look a little bit at anything else they can tell us, they have multiple systems. So down here, they were talking about this is a whole nother system, Hugo. They keep coming out with these names. One company that is more engineering focused is Medtronic. Hugo is actually under Medtronic's umbrella. This company, I would say, is probably a little bit less advanced. You can see the stock price looks great though. So as long as their peers keep having solid reactions like this, you have to think that this is a good sector to be in. If we just look at Johnson & Johnson itself, this is the move. So this isn't something you can get positioned in because it just goes up and up and up, but there's definitely accumulation and large volume that pretty much tells the story of the entire sector in this one chart just over the past week. So I personally think this is the best risk reward opportunity right here in Intuitive Surgical, but the sector as a whole looks solid. So that's the idea. If you like these ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. And if you want to take advantage of our Black Friday $19 Discord membership, head over to stockscommunity.com. I'll see you in the next one.
This is Sam Putnam.
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 This is Sam Putnam. This is Sam Putnam.